Hi guys, happy Monday. Here we go. I know I keep it happy because we're on our way to Friday. Okay, it's all about attitude. John's back with me, and John, thank you again.
No problem.
Last segment we talked about why would you use a broker. He explains that in the video, and also the changes and everything that's happened in our market, in our Vancouver market, which is just bizarre. And so this particular segment, I really would like to focus a little bit more on what the condo thing. When you're buying a condo, what is the bank looking at? I mean, we always think, oh, well, as long as I have my down payment and off I go. I know the bank looks at more stuff than that, John. And so I really would appreciate if you could explain to us, what are they looking at?
Okay, well, the first thing that is looked at, Liddy, is there are three main ratios that come into play for pretty much all mortgages at this point. The first thing is called GDSR, which stands for Gross Debt Service Ratio. That's the percentage of your income that goes towards your principal, interest, taxes, heat, and in the case of a strata property or condo, half of the maintenance. And there's a maximum generally of 35 to as much as 39% of your income that can go towards that portion. The second ratio they look at is called TDSR, which includes GDSR plus other debts, car loans, credit cards, leases, those types of things, and that's generally to a maximum of 42 to maybe 44% all inclusive of gross income. So those are the two of the main things that all lenders look at. The third thing that becomes material is loan to value, how much we're borrowing as a percentage of the purchase price. Up to and including 80% is generally considered to be conventional lending, whereby it can be purchased without insurance. Above 80%, in other words, a down payment less than 20%, you're into what's called a high ratio mortgage, which you incur as a borrower a default insurance from either CMHC, Genworth, or Canada Guarantee. So that's added into the mortgage as a one-time payment, and basically you make your payments over time, paying that portion off with the mortgage itself. Okay, so those are the things that are looked at for qualifying. But beyond that, lenders are also looking at marketability of the property, where it's located, square footage of the property. Generally, smaller units may be less desirable to a bank than larger units. It depends again on location. If you're in a downtown urban area such as downtown Toronto or downtown Vancouver or Lower Mainland in general, what you'll see is smaller units are considered more acceptable than if you're in an outlying area whereby they may not be as desirable from a lending perspective. So where a lender's looking at is the marketability of a property should there be a problem to find a buyer to take over the property. Lenders do not want to be landlords, do not want to own homes. What they want to do is lend on homes. So those are some of the things. But beyond that, you also now get into strata minutes and the different technical things that are needed in order to qualify for a mortgage. So not all lenders will look for strata minutes, but generally they will have a history of a building, and if they feel there's an issue, they will act for them or look for them. Many still do require them, and they generally will want to look at last 6 months of your strata minutes, and they would like to see the last couple of years of AGMs, annual general meetings. When they're looking at them, what you're looking for and what they're looking for is trends in the building. So my recommendation, if you're purchasing a condo, take the time to thoroughly read the strata minutes and the AGM. What's said is important sometimes, may not be as important as what's not said. So read it with a grain of salt and see what's going on in this property. Have there been assessments? How frequent have been those assessments? Have there been recommendations for things that are continually turned down by the owners of the strata? What's the size of the contingency fund? How healthy is it relative to the size of the building? Has there been a plan in place in order for future improvements to the building. Is it well managed in that area? These are all things that need to be looked at. Don't buy a property versus another property based on which one has the lowest strata fees. What's more important is, what are those fees used for? What do they cover? Is there a good contingency? Sometimes I see deferred maintenance with small strata fees can in fact be a real problem for people, because if there's a case whereby people are not wanting to improve the building, then you're into a depreciating asset, or something whereby the value is going to plummet or decrease because of the quality of the property. So these are things that need to be considered as well.
I think that's awesome, John, because it's something that I know I go on about a lot. And there's something that I know people look at me and they go, what? I have never heard of this. And the only reason I've heard of it is because we lived it, okay? And that is, and I don't think there's any way for anybody to find out, because I know where we were buying, it was, nobody really talked about it, and
Right.
it was a conversation, but the building we were buying in was blacklisted.
Okay.
So can you tell me, what does that mean? Not just coming from me. What does blacklisted mean by the bank?
Okay. If you're purchasing a strata property and there's been a history or a problem with that building, all of the insurers, the three that I mentioned earlier, all have a list of buildings that are considered to be problem buildings that they will not provide insurance on. A lot of the lenders rely on back-end insurance to be able to provide low-cost mortgages to clients, and so some of those buildings may not be mortgageable from those types of lenders as well. And it's much easier to get a property onto the list than to get it off. Sometimes there are buildings that are on those lists that may have been remediated. It may no longer be a problem building, but maybe updated information's not been provided to the insurers. So it doesn't necessarily mean it's a problem. However, it needs to be investigated,
Right.
which is a real reason why going in on the purchase of a condo without subjects can be a very dangerous thing if they haven't gone through and thoroughly done their homework.
Do you know, John, I talk about that, I don't know how many videos ago, a few, where I actually said, there's, our housing frenzy seems to be over. So now there seems to be a condo frenzy. It's like, they're everywhere in the news is like 1-bedroom condos in Vancouver, and then I'm hearing whispers of but if you're coming in to make an offer that is like subject to an inspection or subject to this, if it's not a clean offer, don't even bother. You're not going to look at it. And I think you guys, I actually say, I really hope that the realtors that I think are so awesome and that I respect are not getting involved in this, because there is so much more. If you buy a house that you were not aware of a problem, I can call my friends and family members and say, can we put some tarps on it? I don't have the money to do that right now. You buy into a building that's got huge problems, it's going to be voted on at the AGM, and you may not be in a position to pay, but you have to.
That's right.
It's
And
scary.
that goes back to my comment regarding what's said in the strata minutes and what's not being said in the strata minutes. Goes a long way to be able to determine. One of the things that I recommend people do is talk to the strata manager directly and ask them a very simple question, that if they were in a market for a condo, would they buy in the building that you're thinking about? And just look for the reaction from them. If they hem and haw and don't have a standard answer, then you may wonder what's going on in that particular building. Now, there are a lot of buildings that are well managed, terrific. Some are self-managed, some are managed through, most are managed through strata corporation, through maintenance corporations. If you are purchasing a property with a self-managed building, you need to make sure that there are timely, good records kept. In other words, the strata minutes are maintained, because that can be an issue. Many lenders do not like dealing with self-managed buildings, and as a result will ask for all of the documentation to review it. If it's not available, it can be an issue. The other thing that you need to consider are restrictions such as age restrictions. Certain insurers will Some will not insure a high ratio mortgage on a building with, for instance, a 19 and older, or seniors 55 and older, restrictions on buildings. So that's something that needs to be considered as well.
Wow. Okay, well, I think we've covered everything. I'm just going to have a quick look here. Yeah, well, the Blacklisted one was a good one for me. And like I say, the building there where we had all our problems and our issues was a self-managed building.
Okay.
And I have told you guys this before. We had a president that sat on engineers' reports, which is, yes, and he was being sued. So it's really, really scary. If you have a facility that has been run by a management company, there is far more accountability that has to happen. So like you say, there's probably more information there for you to get rather than in a self-run building. Because remember, and we've talked about this many times, many videos, this is probably the most expensive venture output of money you're going to have in your family's history, is buying a home, a roof over your head. And so you want to make sure that you're not going to be what they call in the car business upside down in your mortgage or your payment, where you've got this huge mortgage and the building's falling down around you because you didn't get all the information that you needed. And so probably a good thing that banks do have some of these checkpoints in place.
Absolutely. They don't want to end up with the problem.
Right.
Because you know what happens if that ever happens. Gets turned back in, goes into foreclosure, and it's a real problem. One of the other things I talked about was in terms of future planning. Well, there's a thing called the depreciation report. The depreciation report's very important to take a look at to determine is the strata being managed in a positive manner into the future. Is there a depreciation report, or are they the owners deferring it and not dealing with it? How old is the building?
Or who wrote it?
And who wrote it?
Yes. Because some people have the secretary of the strata write it and do the depreciation report.
I've not seen that one yet, but certainly you want to make sure it's done by an
Ask
engineering
Tom Munro.
company. Okay. Yep, these are all things. There are a lot of great buildings. There are a lot of great realtors as well.
Yes.
Good realtors will do an awful lot of the background with the buildings before they'll show them to the client as well. I've got a number of terrific realtors that I deal with who will provide me with the strata minutes and provide me with all of this information before, even in a multiple bid situation, so that we can go in and take a look and try and mitigate all of these or any of these issues that we can. We can check as to whether it's on a blacklisted, whether the appropriate lenders will consider this building. Do they have a history? We can also take a look and review the strata minutes and the AGMs and look for it from our perspective to make sure there aren't caveats in there that could be an issue. So there are ways, even in multiple bid situation, and I understand the difficulty of too many subjects means an offer that's not taken seriously. But there are things that you can do to mitigate that. I've had situations where client is insistent on a building and has gone ahead and got an inspection done on the building before they make the offer. So these things can be done to try and mitigate those types of issues.
That's great.
Okay.
John, thank you so much.
You're welcome,
I hope
lady.
you guys find this helpful. And like I say again, John's information and his team members will be down below, so you can check that out. And if you enjoyed this, please take a moment to subscribe and a like. We would also appreciate. And if you have any questions, anything that you want to ask, then you can also put that down. And if it's for John, we'll make sure that he gets those questions answered for you.
Not a problem.
There we go. Thanks,
Okay.
John.
Thank you.
Have a good one, guys.
You too.
Bye.